sell it for 265, and I'm gonna buy it for 370. So 370, 265.
You get a
So
lot of background noise
I,
though, so I don't know if you can put your
already-
headset on or something.
I have a background noise.
You have a television noise.
Yeah. By the way, we're recording, so hang on. Okay, I'm muted.
You
Okay.
hear like the canned laughter and stuff. Like, unless you want people think they're laughing at us.
Well, we'll need to trim this video.
Yeah.
All right. I also just started to share my screen. Yeah, I'm bidding 370. Okay, what are you gonna do? Huh.
Okay, well, we're coming back at Tuesday night. Normally, we're not doing. Well, we do stuff on Tuesday. It's
Yeah.
been a 3-day week for us. Right now, it is a little later. It's almost 10 o'clock in Chicago. Markets today were very flat. Volatility for the day sat around 5 to 4% until we expired on the EOM, the end of the month August. So welcome to September, last quarter of the month. Going into week 1 Wednesday, our volatility is what here?
Hang on, let's see. What's the volatility for Wednesday? Okay, Monday and Wednesday, 6.7%.
7%. So it's every night for the last 3 expirations, we started off at 7%, and it goes to 4. Now, I mean, I do remember, it's funny. I went through a couple different markets. So the 90s market, we had volatility at 80%, and, prices kept going up. Then in our 2007 to beginning of 2008, we had volatility down at 12% regular and implied on our then only monthly expiration, unless we had a flex option trade, was on the last day down to like this 7.4%. So it's very, very strange. I mean, and then prior to COVID hitting, if you remember how the market was trading, it was the same thing. We had very low volatility until the COVID hit, and then we went crazy. So sooner or later, low volatility or extremely high volatility means something's going to change. When it happens, God only knows. But in any case, with our core position we have on, it looks like the best thing for us to do is we're going to do another 1x2 like we did yesterday. We're stepping it up a little bit. Today in the trade, we had a tight range in the S&P. We couldn't get over 29 all day long until after the close. Then the market went back up. Right now it's 32. We're going to do the 1x2. We're going to do the 45.25 versus the $20 puts, 1x2, and it looks like we're collecting how much?
Okay, hang on. Right now it's interesting.
Okay, what's it? Well, what does it look like? I saw we collected.
Okay. Yeah, we were, but so we will purchase 365. I sold one at 265, and I'm trying to make I'm working one at 260.
Let's go to 55 and just sell it.
55 is not there. Looks like I'll have to do 250.
Go to 50. Got it?
I'm just playing around with it.
Yeah, it's just a very weird trade.
250.
Super creative.
Okay, 250.
It's fine. I mean, we'll see how the trade goes. Metals today were a little bit stronger. They had some decent volume in there today. Oil was a little bit lower, but natural gas came back up to 440. So even after the hurricane didn't make any movement for it, it moved back up on its own today to 440. Natural gas prices being high, crude oil holding near $70. These are, things for the word inflation. Since last week, right at the close, we had news that the inflation rate is close to 5% in this country. Can you imagine if it's 7%?
Yeah, well, it's third month in a row of 5% reported inflation. And by the way, we did collect it $1.50.
Okay, so that's it. And that's right. That's fine for us. For other people, I wouldn't sell anything. We have a core position, so we're trading against it. I won't want to sell 7% volatility, but there'll be stuff to come. I mean, I think let's get into this month. All the schools, like out west here, schools have opened. So far, nothing major has happened. You're about to get the bulk of the country opening, especially in the places where they would love to shut down again because they want money. So let's see what happens when the Chicago school system opens, New York, Philadelphia, Boston. Let's see what happens with them.
So I'm right now showing daily S&P chart. I don't know if you can see my screen, but it looks like a straight 45-degree angle line.
Yeah.
I have a
picture in my head. I can picture it.
Yeah, and it's coming off of a double bottom created in November. I wouldn't be surprised if this slope of this line would coincide with the inflation rate of inflation.
And you have to remember that the 1980s market, and let's not make this into a 10-minute video for people because they'll get bored, but
Right.
in the 1980 market, you came in with heavy inflation, which did kick off the stock market running because also the dollar was weak and you had super high inflation in the US. So money poured into this country and prices took off. Economists would say that's potential again. I think it's too much. I think we've already run way too much. What are you going to have? If in their mind, you would have the Dow Jones at like 80,000. But this stuff they claimed about Japan too. If you remember in 1990 Japan, when the Nikkei was going to 40,000, we saw what happened to them afterwards. So
Speaking of which, we are at 7 minutes, almost 8 minutes.
Okay, well,
and it set us up a very good conversation that I had with the real estate investor over the weekend. So remind me tomorrow, next time we're going to record, and I will share it to you. It's exactly to what you said.
All right, good topic. All right, you go to bed, and everyone else be well and make some money tomorrow. Talk to you all later. Bye-bye.
Bye-bye.